I had was to make sure that we would jump in participant costs. Obviously that varies a little bit year to year as well due to payroll, due to assessed value, but it doesn't vary much at all. So I said if we can stay within the confines of our current budget and still move forward, we would be interested. And basically, that's how these numbers came up. So with that, I'll open up to questions.
PJ, could you explain to me the tail and how that will work with perma?
Sure.
And how that all ties in? And then I would like to see understand the financials you put out a little bit better. We had a very quick, we showed a chart. We really didn't go over it.
Okay.
Just to see the benefits to the county. And it seems like the tail is the big issue, which I kind of want to understand.
Yeah. Well, the tail belongs to us. Okay. So whatever worker comp cases that we've inherited or dealt with are ours historically. So we have to deal with those on an ongoing basis.
You mean the ones we have currently, right, PJ?
Yes. Yes. But like I said, beginning 8/1, any new claims that would come in, perma would handle, and they would assume the liability for that. I know one of the questions that Art had was, will our clients continue to receive compensation for the tail? And the answer is absolutely yes. We own them. Nothing will change there whatsoever. Those decisions have been made, and moving forward, nothing will change on the ones that we currently have.
PJ, on the ones we currently have, do we still pay them out of the tail, or does perma pay them?
No, we will be paying them.
And who does the administrative work on that? Do we do that, or do they?
Actually, perma will be doing that.
Okay.
Yep.
We had this same changed ownership for Pine Haven. We had to have that tail. Art, you probably remember that. Same thing. We had to cover the exposure that we might have had from any claims that arose while we owned the facility. And the tail was kind of expensive in the beginning, and it drops off, of course, as years go on. Your exposure to liability drops off significantly. And we were responsible for that too. So same thing happens here with workers' compensation. It's exactly the same thing with workers' comp, or whether it be with health insurance.
Once we switch to perma, if we switch to perma, the tail, at what point does the tail become ours? At what point, as those cases close out and we have no more liabilities on the books, whatever's left would then go back to the county?
Well, the tail is always ours.
It's always ours. Yeah.
No, I know that, but it's sitting there now basically to make sure that we have the funds to take care of these cases that we have, correct?
Correct. But the payout to the tail is projected out based on our actuarial that's done every year. Okay. And obviously the first year, next year would be the highest, and then it would trail down from then. And obviously we would have a certain amount, and we'll have those numbers on the screen here, and Kelly pulls it up. Those numbers are actually, we would have to pay some money out of reserve if we kept all the participants' fees the same to start with, but that number would decrease as we move forward.
And is there a current number of how many workman's comp cases we have presently that would not switch over to, that we would be responsible for? Do we have that number?
I don't have an exact number. No, I don't, Rob, at this point in time.
I mean, is it a big number? Is it a small number? I'm just curious.
Well, it's $11, $12 million worth. So it's not the numbers. It's the value of the cases. Okay.
Exposure. Okay.
Yeah. So can anybody see that? Everybody see this?
Yes.
Okay.
Yes.
I can enlarge if you do a certain section at a time.
Okay, that's fine. But basically what I gave you was our historical information for 18, 19, and 20, where we've been, and what our actual expenses were, and what the excess was. In 20, we actually transferred $1 million that had accumulated into our reserve. Up until that point, we've only had a little over about 2.4 million in our reserve. Going way back, Ken used to put $100,000 in every year. And I have to tell you, we were unable to do that by keeping the participant costs the same. We were running so close up until the last 3 years. One of the questions Art has in legal, medical, and indemnity costs, that number fluctuates every year. Next year it could be 2.3. And a lot of that depends on decisions that are made from the workers' comp board, payouts, large payouts, and we've all gone through some of those. A couple $100,000 at a time makes a huge difference. So again, that number does fluctuate. So, and you can see that there over the last 3 years. So moving forward, if we do switch to perma in our first year, you'll see that they projected, we have a reserve of 3.9 million right now. And if everything goes as planned, if things are comparable to the previous year, the projected cost that we would have to take out of our reserve would be 439,000. Again, this number is not exact. It is actually based on our actuarial that's been done every year by an independent auditor. These are claims moving forward. And you'll see, let's see, where is it here? Okay, you see the line that says tail expenses, Rob? You see that? Go to 2021, right there, tail expenses.
Yes.
Okay, that's ours. Okay, so moving forward, that's what we're paying as part of the tail. And you'll see that number based on the actuarial will decrease over the years as we move forward. So that's hopefully an answer to your question. But what we're looking at is, the possibility of taking $500,000 or $600,000 out of our reserves if we do not increase any of the participant costs to cover those tail costs. So that by year 3, we're probably back in the process. And we can then build our reserve funds back to meet our liability at whatever point that is. Right now, we've only got reserves for about 1/3 of the liability that we owe.
Say, PJ, if you back out the tail expenses from the total, it looks like we're projecting workers' comp expenses of about $1.8 million, $1.9 million a year going forward.
Yeah, probably somewhere in there.
Which is to the 2 million, 2 million, 5 million, 9 that we were looking at in the last 3 years.
No, that doesn't. Okay, when we back out the tail expenses, now we're not factoring in the current workers' comp cases that'll come through in the next year. And again, we need a crystal ball for that. So.
Yeah, I understand that part, but the tail expenses going forward, I mean, I don't consider those part of the ongoing workers' comp expense. That's kind of historic workers' comp expense, right?
Yeah.
Yeah,
I mean, the number that's comparable to the 18, 19, and 20 workers' comp expenses should be, in my estimation, the number excluding the tail expenses. And that's pretty much flat to the last few years, with the exception of 2019, which seems to be a high year. But normal seems to be about $1.9 million if you exclude the tail expenses. And I guess my question is that $1.9 million predicated on sort of the number of cases we expect to get, or is that an estimate that we got from PERMA, or what?
I guess I'm a little confused with your question. Again, our expenses will be the 1.1, which is the tail, plus the 1.6 that we're going to pay PERMA. And that includes everything, okay? That includes all current workers' comp claims, includes all investigations, includes all medical and everything else. So I guess the way I look at it is our tail of 1.1, if you look at our costs for 18, 19, and 20 at 1.6, 2 million, 1.4, the current projection would be, yes, probably somewhere around $500,000. And that would make up our $2.5 million total cost.
Well, I guess, PJ, I'm confused. If we have identified tail expenses going forward, how come there are no tail expenses for 18, 19, and 20?
Because
They're included in the legal, medical, and indemnity cost.
yeah, just like Pine Haven, Art. When we sold Pine Haven, we had to have a tail going forward.
Okay, so the tail expenses are in legal, medical, and that would explain the pop between 18 and 19? The half,
Or less if there was large payouts.
is there a way we can break out tail expenses for 18, 19, and 20 so these numbers are comparable?
No,
No.
no.
Okay. Just let me back up for a minute and ask the question, what are the problems we're experiencing now other than the financial issues that led you to make this recommendation? What are we unhappy with regarding our current third-party administrator?
Basically, I can say 100% we are not unhappy with Melissa, who you're familiar with. Above and beyond that, USI has been performing adequately, but they, through PERMA, when I check with some of the other counties, Greene in particular, they constantly contact them on a regular basis. They give them quarterly reports. They do many online services. They will come and perform some of the education requirements. And I'll give you an example right now. We have particular individuals in particular departments that repeatedly have the same workers' comp claim. And some of those issues need to be addressed. And this outfit kind of specializes in that. They have an education aspect that will help us do that.
So PJ, if I could, what I'm hearing is we would be getting better service.
That's correct. I mean, in my anticipation and the references that I checked, it seems to be much.
PJ, we're still responsible for the current cases, correct?
Yes.
And do I understand that, correct?
Yeah.
But going forward, PERMA will administer those cases, the current cases, correct? But
Yeah.
we will be responsible for the funding of those current cases. Is that correct?
That's correct. And you'll see a line on this pro forma, says third-party administrator fees. And in 2021, for $40,000, they will administer our tail.
Okay, so
moving forward, that number decreases as the tail decreases.
got it. So if there is money that needs to be expended for current cases that they are going to take over and administer, how does that work? We cut them a check, an additional check for that money? How does that work?
They eat the current cases.
No, not current. Oh, they say that again.
Starting August 1st, all current cases are theirs. We don't pay out a penny. Because it's in their $1.6 million fee.
Okay, very good. Thank you. Yep.
Yeah, and don't
So-
And they have,
NISAC. So NISAC's recommended PERMA, and that's how we found out about PERMA.
Got it.
NISAC. So NISAC did a lot of venting before they promote PERMA or with any other agency or anything like that. One thing we got going for us is since we changed ownership with the nursing home, our mod rate has dropped significantly. Now, it measures basically the experience rating. It's very much similar to health insurance. Rule of thumb is any mod rate over 1 is terrible, not good at all. Our mod rate, since we changed ownership with nursing homes, has dropped to 0.77. That's remarkably low. That's something that PERMA takes into consideration, or any actuarial going forward, is that. So I think these numbers are probably on the high side, and if we stay at 0.77, about it.
Going to that, Rod, are their fees to us fixed for the next few years, or will they be based on experience?
They're fixed, as you see projected here. You
Okay.
don't increase if our loss ratio drops below a certain percentage or above a certain percentage.
Right.
Highly unlikely based on our history.
And
the other
go,
thing to point out is that perma is set up similar to NYMER. Your participation in the education part of it and other aspects of it, they do issue a rebate at the end of the year. Obviously, we'd have to be with them for a couple of years for that to happen. But Tony, when he comes on board, about that rebate as well.
And going up to the total workers' comp revenue, going forward, it's about 2,681. That's what you collect from, that's what the county contributes, plus the towns, plus whatever else is other?
That's correct. And
Okay.
that number will fluctuate a little bit. You'll see the previous 3 years. And we can actually determine that moving forward. If we up that number, we would have to take less out of reserve, but I don't anticipate doing that. We have some reserve right now to cover that, and I'd like to keep it the way it is until we can start building that reserve back a little bit. Try to keep our costs flat if at all possible.
Okay.
Supervisor Holding had a question.
Hi, so I've been pretty quiet because this is all new to me and I realize you all have a lot of experience with it. So my question's a basic question and it's probably just so I can understand. So Marshall and Sterling did the presentation. My understanding is Marshall and Sterling is the broker and Perma is the provider, and we're looking to change both. Do we currently have Marshall and Sterling as our broker and they're saying, hey, you should go with this other provider? Are we looking to change our broker and our provider to Marshall and Sterling?
Marshall and Sterling will still be the broker of record.
Are they currently the broker for the county?
Yes, they are.
They are.
Okay. And they're just making a recommendation to change providers.
Yes, rather than going out and obtaining insurance like we normally do.
Okay. I will say the town of New Lebanon recently switched to Marshall and Sterling, and they've been fabulous in some of the recommendations they've brought to us that have been a little bit out of the box, different from how we've been doing it. And I know this is a very different situation with the county, but we've been very happy following their guidance, and they haven't led us astray. And at first it was like, wow, this is very different from how we've done things. And we've absolutely loved it. So that's my piece. And other than that, I'm going to stay quiet because I'm just learning all of this. Thank you.
What services are they doing for you? Anyway, health insurance?
So, well, you mentioned we switched to an HRA insurance plan, whereas before we had just a traditional, copay plan. And the employees especially were like, oh my God, an HRA, but we did an employer funded HRA, which I think a lot of them already do. We were behind the 8 ball. But it was this scary thing of like, oh my gosh, there's this high HRA in the beginning, but because we did it as an employer funded HRA, it really as an employee is much better because they don't have any copays, they don't have any deductibles until they hit that HRA, which the town is paying in full. And then our cost, a lot of the town board members were concerned about, because what if you had this, astronomical thing where everyone's HRA, and again, knock on wood, and it's a little more of a risk, but we have shown over the last 4 years since we started with them that our cost is significantly lower. We are not capping out those HRAs, even if it does happen for one employee or one employee's family. It has saved us a lot of money. And the educational piece that we weren't getting before, Marshall and Sterling has trainings both for me as HR and for the employees, and we just weren't getting that before. So it was a little bit like scary because we always had just the traditional plans through CDPHP where, there was no HRA, it was just a copay plan. But it has worked out very well, both from a financial perspective for the town as well as the employees being much happier.
So they're their broker of record, Marshall and Sterling, for your health insurance, correct?
Yes.
Yeah. Okay.
Okay. All right. Are there any more questions for PJ before? And
Well, I guess maybe we wait until they join us on the call, but I was curious about the ownership structure of Perma versus Northeast versus York and how that works, and whether it's relevant or not to our analysis to kind of look into these parent companies and how that all sorts out.
Maybe Kelly, can you just send a quick email or something to Tony there and see if he can jump on?
Okay, yep.
PJ, is our current third-party administrator also owned by somebody in a structure similar to what PERMA has described?
Yeah, they've been bought out a couple times. What we started off with, they've been bought out a couple times, Art.
And our servicing has been changed.
Yeah, and the servicing aspect of it has moved. First it started in Buffalo, then it went to Massachusetts, and it moved around. And again, we're not totally dissatisfied with the current provider, okay? But by the same token is I think we have an opportunity with PERMA to A, lower our liability, and B, lock in our costs. So I think that's really important. And
But I guess what I hear you saying is it's not unusual, like PERMA apparently outsources all of its work to this Association Management, Inc.
yeah,
Sounds like PERMA itself is almost a shell or a marketing company. And is that typical?
yeah, it can be typical because again, it's a level of expertise, workers' comp claims. But I believe that they do have several in-house people that are specialists in worker comp. What they outsource would be just your regular claims, but we can ask Tony to be sure. I have not asked them that either.
Okay, thanks.
Yeah. How's business, Rob? Good?
Yeah, business is excellent, actually. Really,
Yeah.
Thank you. Yeah.
The troops are rolling out, aren't they?
Yeah, we had Monday night, we had like an hour plus wait just to get pizzas.
Wow.
Yeah.
How's your health?
Can you flip a pizza there, Ron?
Yeah.
Yeah, I can.
Ron's a pretty good cook. You may want him.
Yeah, well.
Yeah.
We go in the kitchen with 150 tickets sitting there. It's a little different than cooking at home, I can tell you that. But yeah, we need some more help. That's really our biggest struggle right now. Other than that, everything is really good. Thank you.
It's across the board, all professions.
Yeah, it's rough.
Yeah.
I had one waitress on last night, and we probably had 25 tables. I don't know. She did an amazing job. I mean, I had no one else.
Oh my God.
But he's running from the kitchen, from the counter. It's like a whole.
Yeah.
One thing that I'm finding now is that the customers know that everybody's hurting for help.
Yeah.
And they're a little bit more patient, whereas they'd be screaming and hollering, but they're more patient. So I don't like the situation we're in, but at least customers are a little more understanding, mostly, so
yeah.
I don't, we like to provide service, obviously, but it's hard. It's everywhere. It doesn't matter where you go. There's restaurants that are closing down certain days just because they can't staff them. So we've managed to stay open 7 days a week. So it's been a challenge.
Yeah.
There's all kinds of Facebook posts being like, be kind to your server. They're way overworked. They're way understaffed. Hopefully it sounds like that message is getting out there to people. You're still going to get your Karens, but
Yeah, of course. But mostly I would say it's been, for the amount of volume we do. And, if you get one person, that's why I would say to my staff, we had one person out of 200 takeout orders, it's pretty damn good. So.
Yeah.
The other side, Rob, as you probably know, is I know that Chrissy works for Ginsburg, is product, the shortness of product that they can't get.
Totally. And we're changing products at times where we don't want to, just because we can't get our normal product, which is a problem. Yeah, problems everywhere. It's in every industry, though. It's not just in the food industry. Everywhere. I see Tony's on. I know Matt's got a scoot, so let's get rolling.
Hey, Tony.
Good morning, PJ.
How are you?
Good morning, everyone.
Good. Thanks for jumping
Morning.
on.
Yeah, no problem.
We're going to kind of just cut right to the chase. Art has a couple of questions. So, Art, you want to ask Tony some questions about the company?
Yep. Yes, thank you, PJ. Hi, Tony. I noticed in your annual report a reference to PERMA is managed and staffed by Northeast Association Management, Inc., which is owned by York. And I was wondering how that relationship works. It sounded like all of your administrative staff is in fact not part of PERMA, but part of Northeast. And I was just wondering, what the relationship was between East Association and York. Thank you.
Sure. So if I could briefly give some background. So PERMA was actually formed in 1982 as a safety group. It was a risk management safety group. It was originally established by NICOM. Shortly thereafter, they were picked up in management by a company called MMA Management Services. And again, they provided all administrative staff for PERMA, which is member owned. So if Columbia County comes on, you essentially, you're a member and an owner in PERMA, in the pool. NEAMI's been around. So Northeast Association Management, Inc. Was formed by Brent Wilkes, who was an original member of MMA. And Brent Wilkes formed the Northeast Association Management Corporation. So they have been around since 1995, essentially providing all staffing for PERMA. That changed in 2017 when Brent retired. Brent sold NEAMI to York. Now, since then, York was the third largest third-party administrator in the United States. Since then, they were acquired by Sedgwick. So I need to let you know that. So Sedgwick is the current owner of NEAMI, which is only our claims staff. So our licensed third-party administrator is essentially part of Sedgwick. All other staff that works for PERMA, marketing, sales, member services, underwriting, they're all employed directly by PERMA. We have a contract with Sedgwick, who controls our claim staff. Now, Sedgwick is actually the largest third-party administrator in the United States. They've got a great reputation, but we control that staff. So we're currently under contract with them. If for whatever reason we wanted to change, we would bring that staff back in-house.
When you say you'd bring the staff back in-house, would you be hiring the existing staff, or would you just staff and start from scratch?
Correct. We have the right, and that changed in 2019 when they were acquired by Sedgwick. As I said, all PERMA staff, all other departments were disassociated with Northeast Association Management and now directly by PERMA. So we have the first right to that claim staff, if that makes any sense. They're currently owned by Sedgwick, but once that contract expires, if we don't renew it, we could bring that claim staff directly employed by PERMA.
Okay, thank you. Complicated, but I guess it's working, isn't it?
It is, but it's also part of corporate America these days,
Yeah.
you know, and people do retire. And again, NEAMI was a private company, whereas, you know, PERMA is, you know, non-for-profit pool owned by our members.
And one other question, I noticed somewhere that PERMA is similar to NYMER, a company that can assess its members in the event of a catastrophic financial loss. Is that correct? Are you able to do that in the event of some major financial issue?
We are not able to do that. And actually our program, I'm a copy of, if you don't, I can send it to you immediately, but our program agreement does indicate that we cannot assess our members.
Okay, thank you.
Tony, how many members how many employees does PERMA have?
So PERMA itself currently has about 40 employees. NEAMI has another 40, so approximately 80 employees.
Okay.
Work for the operation.
So if in the event that you decided not to use them and brought it back in-house, then PERMA would be hiring another 30 to 40 people?
Correct.
Okay.
Yeah. And I think that's important for the continuity of the program, of which we're all familiar with, because it really is on an individual basis. Come to know your client and the ins and outs of that particular person. I think we're all familiar with that. One other important note, Tony talked our current provider, USI now, they use Sedgwick, and that's, it's, there aren't many players, so it's not a huge leap here.
Yeah. Tony, one question. The 40 people who are employed by Sedgwick doing perma work, do they do perma exclusively or do they do other companies as well?
Correct. They are exclusive to perma.
Okay, great. Thank you.
Yeah, and by the way, there's PJ knows the Sedgwick name. They are literally, if you look them up, they are the largest third-party administrator in the United States, and they actually even do some international work as well. But that's not to say that we wouldn't continue that relationship. It's just, we have the first right to those employees. So I wanted you to feel comfortable as far as continuity. And by the way, that 90% of that staff, barring retirement or voluntary resignation for whatever reason, that nucleus of that staff has been with us, for about 20 years. So they're well experienced. They're exclusively dedicated to perma, and that's contractual. They can't do any other type of work.
Okay, any other questions for Tony? All right, Tony, we appreciate you coming on.
Okay.
We
Thank
will
you, Tony.
jump off and
All right.
Thank you.
Gentlemen. Have a good day, and we hope to hear from you soon.
Okay, thank you.
Okay. Thank you.
yeah.
Okay, any, so,
Thank you, PJ. That was a very, very useful meeting. I am comfortable.
Again, I appreciate all the questions and the vetting. Sometimes you feel like you're out on an island, and I appreciate the vetting and the questions that you people have. And, even after today, I feel more comfortable with them than I did before. So I think we're making the right move here.
to call a special finance before the board meeting. So I think we would need a motion from this group to send it to finance.
I'll make a motion that we, I guess, on perma as our workman's comp company.
Okay,
I'll second that motion.
second, all in favor?
Aye.
Aye.
Opposed? Carried.
So Chairman, the goal is to have this on the July full board meeting and just have a special meeting right before the full board.
Yes, because we have to, our current policy would end in August. So we don't have a lot of time.
Does it have to go through a subcommittee like county government or something to get to finance? How does that work?
Insurance to finance.
Okay,
Actually,
great.
this committee is a sub of finance.
Correct.
Great.
How much notice do we have to give our current provider?
That was going to be my next question. Is everybody comfortable with me giving notice? It's like 60 days. Perma has agreed that they won't take on the tail portion until at least October 1st, because it's going to take quite a while to transition these things over. I'm anticipating it may even be November 1st, but and we will have to engage our current provider until that time. So, and I did calculate those costs in the miscellaneous cost section.
I don't foresee an issue with our caucus. I don't know, Supervisor Hoatling.
Yeah, so that's my question actually, because my caucus might see, oh, it's not an emergency, but we're having this special thing. It didn't go through whatever process, so I want to nip that in the bud. PJ, if caucus members have questions, it seemed like I paid attention, but this is new to me, so I don't know that I could explain it as well. So sure. PJ, would you be the point person if any of my caucus members had questions before the board meeting?
Absolutely, or I'd be glad to attend your caucus too.
Okay, that sounds great, because I think the caucus will fully be in support as long as they feel like they're in the know and they're able, just like we were able to ask questions or answer any concerns. So I just want to make sure we do that.
Absolutely, no problem.
Okay, great. Thanks, PJ.
Yep.
Okay. Anything else?
Well, thank you, everybody.
All right, thank you. I need a motion to adjourn.
So moved.
Second.
Arbison, second. Rob, all in favor?
Aye.
Aye.
Opposed? Carried. Thank you all.
Thank